Hello, bankers. A very good evening to all of you. Welcome back. Welcome to JIB CAV Prep. Guys, in this particular session, we are going to discuss and decode our unit number 8 from Module A, which is all about Bill of Exchange, right? So, Bill of Exchange, this is a unit which will give you multiple benefits, right? It is also part of your IN, IFS, and PPV. But in every, especially if you compare with the IN, IFS, so they have a different aspect. When it comes to unit number 8, you can expect 1 to 2 marks question based on this particular unit. So basically, type of instrument of credit, which include your bill of exchange and promissory note. Then we have terms and due date of bill. So certain terminologies which is associated with the bill of exchange, right? So these are the two units. Then we have accounting entries, accommodation bill, bill books, right? So these are some areas which is generally part of your bill of exchange. So when it comes to bill of exchange, it is a negotiable instruments which is defined under section 5 of Negotiable Instrument Act 1881. We have three major instruments which are your promissory note, section 4, bill of exchange, section 5, and section 6 is your check system, right? And in your curriculum, they have like this unit is around 90% belongs to bill of exchange and remaining 7 to 8% to your promissory note, and the remaining 2 to 3% they just have defined the check and the features of check itself, right? So in this particular session we are going to discuss bill of exchange in detail, and we will be discussing the exam questions and other also, right? So negotiable instruments, when it comes to negotiable instrument, these are the instrument which we can use as a instruments of credit, or they are negotiating the basically the existence of cash also. Let's say if you have to make payments as a person, you have to make person a payment to someone else. So either you can go with the online payments or cash, or like if that payments is in future date, so you can do that particular transaction by using these negotiable instrument, right? When it comes to the credit instrument, so we have majorly two: bill of exchange, which is drawn by the creditors, means the seller, and when it comes to promissory note, it is drawn by the debtor, which is buyer in that particular case, right? So, negotiable instrument are documents which promise payment to assignee, the person whom it is assigned or assigned to or given to, or a specified person. In India, we have NI Act 1881 is responsible for governing all negotiable instruments. This law defines these instruments and also deal with each type of them individually, as we discussed this, right? Promissory note, section 4, drawn by the debtors, right? Bill of exchange, which is section 5, again, which is drawn by the creditors, and check system, or check, which is drawn by the debtor itself, right? So this is the one. Parties and others, they are generally part of this one. But in your curriculum, this is like your bill of exchange. This topic is around 80 to 90% around this particular instrument only. So we will be discussing this accordingly, right? So let's start the discussion with very first instrument, which is bill of exchange. So when it comes to bill of exchange, it is a creditor document. That means it is issued and it is drawn by the creditor. Creditor means seller. Let's say there are two parties, A, who is seller, let's say A sell goods to B worth rupees, B is buyer in our case, let's say, okay. So A sold goods to B worth rupees 5 lakh, okay. And the credit period is, let's say, 3 months, right? The credit period is 3 months. That means after 3 months, B need to pay A worth rupees 5 lakh for the value received. So in this particular case, how like A, which is a creditor whose account is going to be credited, and B is debtor who is a buyer who need to make payment to A. So bill of exchange, which is drawn by the creditor. So A will draw bill of exchange. I order to pay me or my order worth rupees 5 lakh for value received. And the acceptance by the debtor is necessary, right? So means the acceptance of B is like it is must in case of bill of exchange. But when it comes to promissory note, acceptance is not required, right? So 2 months after, that means this bill is for 60 days. Okay? Pay me or my order the sum of rupees 4 lakh only for the value received. So this is the bill, okay, which is accepted by, means this is a debtor. Okay? This is debtor signed by Raj Kiran and Kunal Singh, who is a creditor who issued this particular bill. So this is the format. So we have three parties involved in bill of exchange. Okay? One is your which is who generally issue that drawer. Drawer is Kunal Singh, and then we have drawee. When it comes to drawee, so we have the to whom this bill is assigned, and third party is pay. Pay is who is going to receive the benefit. It can be Kunal most of the time, or it can be any bank also. Okay, so we there are so many terminologies associated with this particular one also. Okay, so we will be discussing all these particular one in detail once we'll go through that particular part as well, right? So I hope you get a fair idea around this one. So bill of exchange refer to a legally binding. Why it is mentioned legally binding? Because it is a part of section 5 of NI Act 1881, right? So it is a written commitments, or it is a written documents, so which can be for, like, if any party is not fulfilling the requirements, it can be notified by the notary public, right? So written documents which instruct a party, means debtor, to pay a predetermined sum of money to the second party, which is a creditor, right? So this is like, let's say we have drawer, Mr. Suresh. We have, this is in your book itself, Mr. Mehta, who is a drawee, means a drawer means आपका creditor and drawee is your debtor, right? Amount is 10,000. Date of bill is 10th March, and 3 days is basically the grace period, acceptance, and the period is 2 months. So in that particular case, drawer means Suresh will issue this particular bill, or this bill is drawn by the Suresh on Mehta, Mr. Mehta. 2 months later or after, pay me or my order a sum of 10,000 only for value received. And the acceptance by the Mehta sir is important in this particular case as well, right? This is the legal definition as per section 5 of Negotiable Instrument Act 1881, and this definition is very important, because with this, with the help of definition itself, you'll get to know the features of bill of exchange, and they get asked so many times in your examination. So negotiable bill of exchange, an instrument in writing, that means it should be in written. It is an unconditional order, that means you cannot make any changes. Like if this is the one thing and accepted, then there is no if and but. Now Mehta sir is responsible to make the payments to Sunil Aapka in the Suresh Aapka in this particular case. Okay? Signed by the maker. Maker means creditor, directing a certain person who is debtor to pay a certain sum of money only to, or to an order of a certain person, or to the bearer, which can be any third party in case of endorsement, right? So this is the definition of your bill of exchange. Okay? Based on this particular definition only, so when it comes to the features of bill of exchange, it include an instrument in writing signed by the maker, creditor, containing unconditional order. There is no if and but, to pay a certain sum of money or money only to a person named in the instrument, or to his order to the bearer. Like let's say Mr. A who issue draw a bill on B, you have to pay me this amount. So later on, A assign that particular one or endorse that particular bill to C. So now that bearer is C, he'll be, let's say if he hold like he fulfill the whole your आपका the due courses and all, so that will be part of this one. Okay? On a certain fixed future date or a demand, so it can be usance, or it can be demand. Demand is at the time of presentation, they have to make that fund availability. Usance is where we have 3 months or 4 months or 2 months, not 4 months, 3 months maximum, again, or it can be 2 months or 1 month also. Okay. Section 5 of Negotiable Instrument Act 1881. From above the definition, you will observe the three parties, which is drawer, so a person who draw the bill; drawee, a person to whom the bill is drawn; creditor, debtors; payee, a person who is going to receive. So most of the time your drawer or payee are similar, or it can be different also, right? So these are the features of bill of exchange, okay, so which you have to take care. I hope this is clear to everyone, guys, okay. Now there are some important terminologies which are associated with bill of exchange. They are very, very, very important, right? So there are 13 to 15 terminologies which is associated with this one. First one is holder. So holder is, it can be payee or it can be creditor or any other person, okay, who issue that particular, who hold that particular one, who is going to encash that particular one, or who is going to receive the money. Holder. So the person who is legally entitled to receive money on due date. So that is holder. Then holder due course. This is something very, very important one. So holder in due course, it can be like, let's say A draw a bill on B. A is holder because A have given some sort of services or some goods to the B, and they do have invoices to prove that particular transaction. Now, this is not only about the sales. When A endorsed that particular bill to C, so C also have to justify that particular one. Ki, this bill of exchange he got for some value transactions and all. Okay. So the definition of holder due course is very important. The holder of negotiable instrument is called holder in due course if he satisfy the following condition. So there are three conditions. First, he obtained the instrument for valuable consideration. A gives some services to B, that is a valuable, or there is an invoice, or like A pass on some bills to B, goods to B, so that is the one. He become holder of instrument before its maturity. Let's say the maturity is 60 days, so he should become, or he should get that assignment or endorsement before that particular date. C is he had no cause to believe that that any defect exists in the title of the person from whom he derived his title in others. Okay? So let's say if it is a normal case, so drawer and drawee, and if there is an endorsement case also, so there should not be any kind of defect which should exist in the title itself. So holder in due course, this get asked so many times for half marks, so please do remember all these three conditions. Okay. Now bill sent to bank for collection, this is very simple. Okay. This is very simple, this is very simple, right? So the bill sent for bank for collection by the holder itself. Okay, so and holder is going to receive the money. So bill sent for collection of the amounts on behalf of the holder of the bill. Honoring the bill, again very simple. Okay. So the drawee, he is making timely payment whatever the date mentioned on that particular one. Okay. So basically, let's say you are a creditor, you draw a bill on me for 60 days. The date came and you presented that bill on your bank and it got on. So basically, it got honored means I'm maintaining the sufficient funds, so you can get your value for that particular one. Okay? So that is honoring the bill. Okay? Dishonor is आपका you presented that bill on 60th day as per the promise or date, but there was insufficient funds in my account, so that is dishonor, right? So now case will story will start from this particular one here. When the drawee of the bill is unable or refuse to make the payments on the due date, so this is called dishonor. Okay? Before coming to the non-sufficient charges or the dishonoring case, or notary or notary public or notifying and others, there is one another point which is called discounting of bill. So discounting of bill, it is a kind of a credit facility which is provided by bank to the exporters and all. Let's say I'm a small exporter. I did a export worth rupees 10 lakh to party ABC. I'm going to receive that 10 lakh after 3 months, right? So now I approaches to you as my banker कि I am going to receive this particular money or value after 3 months, but for the working capital purpose and any other business purposes, I need some sort of money. So I have given or the authority or I have passed the ownership to you, and you discount that particular one, let's say at 5%. That means 10%, 5% of 10, 5 lakh, 5% of 10 lakh you will receive as a commission, because you are managing or you are giving me money for the next 3 months as a kind of a loan. That is this one. Okay? So before the due date of bill, the holder may endorse the bill in favor of his banker and get immediate cash from the banker. So this is called discounting. So I do not have to wait for next 90 days, because that as per the requirement, I'll be requiring that money or I'll be needing that particular money and all. So that is something which is part of this particular one, right? Next one, endorsement of bill, transfer of bill to some other person by the banker's holder. Okay. So let's say it is a case where as a owner, I'm transferring that particular one. Let's say I A draw bill on B. Now A, who have some sort of like they have some vendors from where I have purchased that raw material. I have to make them payments. So I directly assign that bill to C, from them I have purchased those raw material and all. Okay. Retirement of bill. This is something. Let's say there is a bill where we have a date mentioned. Let's say 90 days, right? But that drawee make the payment on the 60th day. So that is called, now that bill will got retired. Okay. So when the drawee pay the bill before its due date, it is called retirement of bill. Renewal of bill, it is a case of kind of non-fulfillment of commitment. Let's say A draw bill on B. Now A won't be able to make payment on the given date. Let's say 60th day. So now A approach to let's say A draw a bill on B. So B have liability to make payments on 60th day. Let's assume that B won't be able to make that payment on 60th day. He approaches to A. Ki, yeah, this is the problem which I'm facing right now. And what I can do, ki, like let's say out of 10 lakh, I can give you 2 lakh in cash. Remaining 8 lakh, please draw a fresh bill. And if you want, you can charge the interest of this particular person as per the negotiation. So that is renewal. So when drawee unable to meet the bill on due date, he requests the drawer to accept a part of the bill amount in cash, and for the balance draw him on a fresh bill together with the interest also, right? Accommodation of bill, when one party accept the bill drawn on him by the another. It is something, let's say there are two like two businesses or two business partner. Let's say like A is drawing bill on B. There is no actual transaction happen. Like let's say B does not have actual liabilities and all, but he needs some sort of money. So B is helping in that particular case. Okay? So when one party accept the bill drawn on him by another without any consideration, there is no sales purchase between those parties. Okay? For the purpose of mutual help, the bill is said to be accommodation bill, right? Next one. Now, these particular things are generally from here to here. They generally belongs in the case of your default. Okay, let's say default means dishonor. Dishonor of bill, we know. Okay, the date was 60th date. Okay, and drawee refused to make payment or they are unable to make payments. Now dishonor, that bill got disowned. Okay. So now we'll have some sort of battle, legal battle. Okay. And that legal battle which start with the notary public. So as a drawer of the bill, I have to approach to notary public. It's a government official who will notify your case. Okay. So in that particular case, he is an officer appointed by government to exercise the power and functions relating to protesting of negotiable instrument for dishonor. So he is going to account that particular one. Noting is, on dishonor of bill, the holder in due course present the bill to a notary public to make necessary entries on the bill or on separate paper attached to the bill. Okay, that is called noting. protest, then after this you will file a case. When the promissory note or bill of exchange has been disowned for non-acceptance or non-payments, the holder may, within a reasonable period, cause such dishonor to be noted and certified by the notary public, such as that is generally known as that official outcome disowning, or the certificate you will get from that one, that is called protest. Okay? Noting charges, so you have to pay some amount to this particular process to governments. So that is called आपका noting charges. Okay? So this is the one. And the final term is a rebate. When it comes to rebate, let's say A draw bill on B for 90 days, and now let's say there is a case ki B is making some sort of offer to A ki if I pay this particular bill on 30th day, so if you allow us a discount of 1%, so we'll make payments on 30th only. So if that deal happened between these two, that is called rebate on bill. So when a bill is paid by drawee before due date, some allowances is given to him. This is generally known as rebate, right? So these are some terminologies which are associated with your bill of exchange, and they are a very, very important one. Sometimes you will see the statements, which statement is wrong, and out of, let's say, 4 statement, 1 is incorrect, 3 are correct. So you have to develop or understand these particular one in detail, right? Now the next instrument is promissory note. So when it comes to promissory note, it is an instrument which is written by the, or which is drawn by the debtor. Debtor means the buyer, right? So as I gave you a case, A is seller, A is seller, and A sold some goods to B. B is your buyer, right? So the amount was 5 lakh rupees. So if it is so if A draw bill on B, it is your, that is generally known as your that is called bill of exchange, which we have discussed. Now promissory note, when B draw B provides some sort of promises to A, that is called your bill of exchange, right? So STEM, like in this particular case, B will issue or give a written promise. I promise to pay you or your order worth rupees 5 lakh for value received. Okay? So 2 months later, I promise to pay Mr. Sushil or his order a sum of 10,000 only for the value received. In this case, the debtor itself making promise, so we do not need any sort of acceptance. So acceptance is not mandatory in this particular case. Even in case of any dishonor and others, you do not have to root through the notary public and all. Okay? That is that is directly can be challenged in this one. Okay? So this is the format of this one. So now go through the definition. Again, you will get the feature and all. An instrument in writing. So aapka, this is the same thing which we have for bill of exchange also. Containing an unconditional order. This is also same, right, by the maker to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So that is generally known as your promissory note. I promise to pay you or your order worth rupees this for value received. So this is something which is generally part of this one. We have two parties. One is maker. Maker means drawer, means debtor, right? So drawer, an individual or entity who make or draw the promissory note with a promise to pay a certain sum of money in this, which is also known as promisor. Payee आपका, the payee is the person in whose favor the promissory note is drawn, which is basically your creditor in this particular case. Now, this is something which is very, very important. So many times you'll see the question around this particular slide, right? So basically, the differences between bill of exchange and promissory note, the most asked question in your examination. I hope now everybody able to find out this. So bill of exchange, an unconditional order, same unconditional promise. Okay? It is made by the creditor. Most of the time you guys get confused with this. It is आपका debtor, right? Acceptance by debtor is necessary. No acceptance is required. There are three parties, there are two parties. On dishonor of bill, it is usually noted by notary public, but here noting is not necessary because it is drawn by the debtor itself, right? So this is done. So this is something which you have to have remember, and that is definitely going to help you in your upcoming examination. Now next one, the final instrument is check. Very simple one. We all know check and the things around us. So, Section 6 of Negotiable Instrument Act 1881, a check is a bill of exchange drawn upon a specified banker and payable on demand. So, features of check. This is the only content which is given in your book. So, a check must fulfill all the essential elements of bill of exchange. Means written unconditional order and those kind of things. It must be payable to bearer or order to, but in either case it must payable on demand. The banker, bearer means to who hold that particular one. The banker name thereon pays it when the presented for the payments. The signature must tally with the specimen signature of the drawer kept in the bank, kept in the bank itself. Your account signature, and that should, like, the account holder signature and the signature which is mentioned on the check should be similar in all, right? So this is the one. Only this much of content given for your आपका check system and all. There is one comparison also. Yes, हाँ. So bill of exchange and check. If you compare these one, a bill of exchange can be drawn upon any person, including a bank. A check is drawn only upon bank. A bill of exchange require acceptance. It does not require any acceptance. The acceptor of bill of exchange is allowed 3 days. There is a 3 days grace period, but there is always on demand. Take the exact date आपका, ठीक है. Here we have 3 days grace period. Let's say if the date is 1st of August, so आपका first, second, third, it will be payable on 4th आपका, right? A bill of exchange must be stamped. This point is important. Please do remember this. A check does not require any stamp, but this is required. Notice of dishonor is necessary. Here, aapka, we do not need, like if check got bounced or dishonor, we do not need any kind of that routing that particular transaction through the notary and others. All right. So this is something which is related to this particular one. Correct? Chalo. Now we will be practicing some PYQs as well as some expected question based on this particular unit. First question, statement regarding bill of exchange are correct. A bill of exchange must be it must be writing and signed by the drawee. No, it is wrong. It should be आपका creditor. Creditor means आपका drawer. Creditor means drawer. So statement A आपका wrong. It contain unconditional order to pay specific sum of money. True. A bill of exchange can be payable either on demand or a fixed future date. True. The drawer is a person who create the bill. A drawer, who the person who create the bill, drawer, seller, or draw your creditor. True. The payee is always different. No, it is not always different. It can be drawer itself, right? So 2, 3, 4. 2, 3, 4 means option B will be right answer for this particular question, right? So statement 1 was wrong. The bill must sign by the drawer, not by the drawee. Statement 5 was wrong. Drawer and pay can be same person, or in most of the cases even they are same person, right? Consider the following statement regarding the promissory note and bill of exchange. Promissory note and bill of exchange. A promissory note is made by debtor, true. Debtor means buyer. Where bill of exchange is made by creditor. First statement is 100% true. A promissory note require acceptance by the payee. In case of promissory note, acceptance is not required. In case of bill of exchange, acceptance is mandatory. A bill of exchange involve three parties, where promissory note only two parties, 100% true. On dishonor, noting by the notary public is mandatory in case of promissory note. No, it is not mandatory. In case of bill of exchange, it is mandatory. This is also wrong. A promissory note contain an unconditional promise to pay a certain amount. True, right? So 134, 135 means Option A only will be right answer for this one. So statement 4 was wrong. Noting by notary is not required in case of promissory note, but in case of bill of exchange it is mandatory. Promissory note do not require any acceptance. In case of bill of exchange, again it is mandatory. Next one. Suresh, a businessman, has drawn a bill of exchange on 1st June for a period of 2 months, means July, August. August, 3 days grace period means first, second, third, right? So in this particular case, आपका 3 days will be considered. It is bill of exchange. The bill of exchange not presented for payable on demand side or presentment. The bill of drawn 50,000. According to the term, the maturity date of bill will be calculated after adding how many days? 3 days grace period to the actual period. Okay. The bill is presented for payment and observe that due date is for 15th August. So if that is the case, it will be in case of previous day means 14th August, 15th August, the national holiday independent days. Okay. So 3 days 14 August. Okay. 3 days 14th August. So what will be your correct answer? A only will be right answer for this particular one. Okay. So previous day. In case of bill of exchange, it is accounted as previous date. So term and due date on of bill of exchange, every promissory note or bill of exchange which is not expressed to be payable on demand side or presentment mature on the date it if it falls. Okay. This period is called term or tenure of bill. The date of maturity in such cases calculated after adding 3 days of grace period to the actual period. If the date fall on public holiday, say let's say 15th August, 15th August, then it become due on the previous working day, which is 14th August. Understood, guys? Very important. Please do remember this particular one. This will help you in your upcoming examination also. Next one. Which of the following statement is true regarding the bill of exchange? It is a demand instrument payable only at site. No. It is negotiable instrument that can be transferred to a third party. 100% true. That is called endorsement. Okay, so that is generally known as endorsement. Next one, guys. Just a minute, huh? All right. Sure. Next one. Which of the following scenarios would result in a bill of exchange being considered invalid under section Negotiable Instrument Act 1881? The bill is not signed by the drawer. The bill contains an ambiguous date for payments. The bill is drawn on non-existent person or entity. The bill is drawn in favor of a third party without endorsement. Okay, now the question is, which of the following scenario would result in a bill of exchange being considered invalid under negotiable? So I'll go with the bill is drawn on a non-existent person or entity. C should be right answer. Yes. A bill of exchange must be drawn on existing person or entity. If drawn on non-existent person, it is invalid. While lack of signature or ambiguous date may affect the enforceability, but doesn't necessarily invalidate the instrument and all. That's why we picked up statement C. In case where bill of exchange is disowned due to non-acceptance, which of the following is true? The holder can only claim from the drawee after giving notice. The holder must wait for the drawer's acceptance. The holder must accept offer in extended amounts period made by this. The holder can protest the bill and claim the amount. So D will be right answer. This we have discussed through the those terminologies. Mr. Ram, a business owner, received bill of exchange from his supervisor Rohit for goods purchase. The bill has a due date of 60 days. Ram need immediate funds and decide to transfer the ownership of the bill to Mr. Joshua. So it is called what? It is known as endorsement. Okay? Endorsement of bill means statement 2 will be right answer for this particular one. Okay? So thus these were the exact terminologies and all which we have already discussed, and without missing any single statement from this particular documents, right? So we have already discussed all these: protest, noting, notary public, accommodations, endorsements, and everything which is part of this one in same sequence. Under the Negotiable Instrument Act 1881, a bill of exchange must contain which of the following elements to be considered valid. So it must be payable only on future date. It must be signed by the drawee. No. It is contain unconditional order to pay a certain sum of money. No. Option C will be right answer for this particular one. In case of drawee refuse to accept the bill of exchange, the holder has right to protest the bill and claim. In case of drawee refuse to accept the bill of exchange, so protest the bill and claim damage, extend the bill, transfer the bill, and others. So option A only will be right answer, protest through the notary public. Which of the following are the most commonly used instrument of credit? So we have bill of exchange, promissory note. C will be right answer. There are how many parties involved in bill of exchange? So we have three parties: drawer, drawee, and pay. So these are the three parties which are generally part of your bill of exchange. Okay. Which of the following scenario illustrate the concept of rebate on the bill of exchange? Rebate was a case like A draw bill on B, which is payable in 3 months. Now B is offering some sort of deal ki if I pay this particular bill on 30th day, so will I get a rebate of 1%? If A accept, that is called rebate. So X receive a bill from his superior supplier with a due date of 30 days. He decided to pay the bill on 25th day and receive a 5% discount only. It can be first one only. A only will be right answer for this one. Correct? Hai? Next one. Dash is a written undertaking by buyer. So it is buyer means promissory note. Okay? I promise to pay you or your orders on a certain days. Right? Promissory note. Which of the following statement are incorrect regarding the similarities in bill of exchange and promissory note? So both are unconditional order. In bill of exchange there are three parties. Promissory note there are two parties. Bill of exchange is made by debtor. No, it is upper creditor and it is by debtor. So statement C is wrong. So that's why this is the right answer. In case of bill of exchange, acceptance is by the debtor is necessary, but it is not. So C only will be right answer for this one. Correct? Hai? Which of the following statement are incorrect with reference to promissory note? It is instrument in writing, unconditional order, signed by maker, promissory note, signed by maker to pay a certain sum of money. It is defined under section 4. It is defined under section 4. So D is wrong in this particular one, right? Rest all statements are correct. When the drawee of the bill unable or refuse the make the payments, it is called dishonor of bill. B will be correct answer. So these all terminologies which we have studied, right? So this is all about your bill of exchange, promissory note, and a small portion of check also. I hope you get all these particular thing clearly, and the like this way you guys are going to achieve 1 marks. On an average you will see 1 marks, but sometimes it is they generally go for 1 or 2 marks also, and even this will also help you to build your foundation for your I and IFS subject also, because there also they have explained bill of exchange in detail, or even the other instruments also. All right, so hope this is clear to all of you guys. This is it from my side. And in our next session, I will be discussing our unit number 9. And books are already live. Apart from AFM, we have live with all the three subject books and all. Again, soon I'll upload the AFM also before your notification for August 1. Right? That means before first. That is my commitment. And keep watching these particular session. Keep going through the content. And if you are facing any difficulties, just feel free to connect with me on Telegram or WhatsApp or anywhere else, right? So this is it. Wish you all the very best for your preparation, guys. Thank you.